guys, hi everyone. Good morning, good afternoon, good evening, wherever you are. Can you guys hear me so far? Okay. Okay, shall we just wait for I think 1 more minute. All right, I will start the session. So today is just a continue from like 2 weeks ago. We're going to deep dive about Fibonacci retracement and Fibonacci extension. Okay, I have the example for Fibonacci extension for like I think last night. If you to use Fibonacci extension, you can like sell gold yesterday night. Okay. Okay, shall we start? I don't want to keep you guys waiting. Okay, so before I start the webinar, disclaimer first. Okay, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation. IC Market makes no representation and assume no liability as to accuracy or completeness of the information provided, nor any loss arising from any investment based on recommendation, forecast, or other information supplied by IC Market. Risk warning: trading forex and CFD carries significant risk to your capital, and you should only trade with the money you can afford to lose. Trading forex and CFD may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. Okay. And about myself, my name is Peggy. I'm an investment analyst and a prop trader as well. So some of you guys should already know me by now. By the way, if you have any question along the way, you can just send the question anytime. Okay, I will try to answer all your question. And at the end of the presentation, we'll look at the chart and maybe find the trade setup together. Okay, so basically today we're going to talk about what is Fibonacci retracement, what are Fibonacci extension, and how we're going to use Fibonacci retracement extension to trade. Okay, and practical example. So understanding Fibonacci retracement. So what are they? So basically Fibonacci retracement used in technical analysis to identify potential support and resistance based on Fibonacci frequency. Okay, and how they work. So basically they measure the distance between 2 points, then divide the distance into percentage based on Fibonacci frequency to pinpoint key level. Okay, so what are Fibonacci retracement? Like I just mentioned, we use to identify support and resistance. It also identify potential reversal level during a pullback within a trend. Okay, there is a key level that we are using for Fibonacci retracement. So if you see the pullback at 23.6%, either you call like small pullback, and 38.2 to 50% we just call like moderate retracement, and 61.8% is a golden ratio, significant level for reversal, and the last one 78.6 is the last pullback basically. And how we're going to use, so basically you need to identify the swing high and swing low. So swing high to swing low, I mean like the recent one. Okay, and then you plot Fibonacci level between those points. Look for the reaction at those level. For example, this is uptrend, for example. So the starting point is always 100%. Okay, and then you plot here at any point is always 0. You draw from your left to your right, and this is the last pullback. So you can see that when the price reach 78.6%, you can see the bounce up, right? So this we identify at the support level, and you can see that 78.6%. But if Fibonacci acting at the resistance level, okay, your starting point is swing high. For example, this is a swing high, right? And this is your swing low or recent low here. Starting point is always 100%, and you pull from your left to your right, any point is 0. this is your resistance level, okay, and then you can see that it line up with 50% Fibonacci level, so it is acting the resistance level, okay. And it's very nice. Why? If you were to read the candle, you know that this is very overlap. We call overlap resistance level, and you can see that one price, okay, react at the resistance. You can see your price action at this candle, then you continue to sell. So this could identify like bearish trend or yeah, okay. I'm going to talk about what are Fibonacci extension. So I have the example which is just mentioned. I will show you guys at the end of the presentation. Fibonacci extension. So Fibonacci extension is extending trend. Okay, we used extension last night for gold to sell at 28.30, I think, like all-time high. Okay, so basically Fibonacci extension are similar to retracement, but instead of measuring a price reversal, they measure how far a trend might continue. Okay, finding potential target, so they project potential price target based on Fibonacci frequency, indicating where the trend might pause or reverse. Understanding the momentum, so they can help you to identify potential level where the trend might accelerate, providing insight into the market momentum. Okay, I show you the example of gold. Okay, the Fibonacci extension, there will be two number. We will use Fibonacci extension. That's it. That would be, this is headphone time frame. Let me just this, okay. We will use the extension when the price break above. Oh no, I wrong. Oh, what's wrong? For example, here, this is a headphone time frame. Okay, this is our high, right? So when we want to use Fibonacci extension, we want to see when the price is going to stop. Okay, if price break above the high, this is our high, right? And this is our low. So we use Fibonacci extension, which is in the trading view. Retracement, Fibonacci retracement extension is the same tools. Okay, it's right here. Okay, you plot here. If price break above the starting point, which is 100%, which is all the high, the next target that we are looking for, which is this two extension, which is 127.20 or 161.8. okay, and then you could see I make it slower, right? And then you can see boom, right? You can see that one price break above the high. Okay, you could see that price is stop where? Stop at our extension. So this is your sell entry. For example, like a lot of people say, okay, yesterday price was it is a all-time high, right, at 28.17. Let's say if you got stop out, okay, the next zone that you want to sell is where you need to look for the extension, which is 127.20. okay, if you go even down to the lower time frame, what do you see? I go to M5. okay, you see that? What do you see? Your lovely price action right here. Okay, so it will give you the confirmation or to have like the confidence to sell, right? You can see that we were waiting here at the extension 127, and then you can see that one price reached the extension, then you see the lovely price action, so you sell. Okay, you sell here, and then where is your TP or take profit is your pullback support, which is what is here, right? You can see that this is your like support level. Okay, this is how we use the extension. So the extension we use two number, which is 127, like this number, and the next one is 161.8. Before that, anyone get the sell at this level, another extension 161.8 at this. I will move this one. Okay, now price break above where break above this high, right? So you need to use the extension. Okay, do you see that? First is almost reaching the extension 127 right here, and this one you could identify either intermediate support level, or if you want to highlight the zone that might be quite big because it's the wick and the body is right here. Okay, and then we could identify, okay, this one I will identify at my first resistance, but if price break above, okay, this is going to be my next resistance level. Let's see. Okay, you can see that price go all the way to where? Over here, extension 161 point is almost reach your extension right here. Okay, if you go to H4 or daily time frame, where you're going to draw extension, when I say that, anybody can answer where we going to pick the extension from this high or this high. Okay, before that, where? Anyone? I 1 or 2. Oh my. Anyone? I give you 1 minute, 1 or 1 sec, 2 sec. It's okay. I remove. Okay. You will get the entry here. You draw Fibonacci form. The recent high. The recent high is where? Is here, right? Since you draw Fibonacci, what you could see? Here is your extension based on your daily time frame, right? Over here. 2 is no, it's 1, it's here. You need to pick the recent one, which is the recent one. Yet if you want to find the confidence, you can, but you see you won't get, you will get that the next one is too far, right? Okay, now I find the extension based on daily. I go to H4. Okay, you see that? You will get the entry. This it should be like last week. It is last week or when was that? Price come here. Yeah, 31st Jan, right? Price break above. This is your extension. Okay, you could combine. I can draw from here for like small. So this is going to be my zone, right? You can find the confluence. This is your sell zone, your sell entry. So like you will get the sale like last 31st of January, which is last week. It was sale here, and price, what you could see that price go all the way to where? To here, right? To our pullback. Why? Because this is our recent high is here, right? Price break above and continue. If you know how to use Fibonacci correctly, you might know that this one of the harmonic pattern, right? This is your harmonic pattern. It look like that, right? This is your harmonic pattern. So if you want to learn the harmonic pattern or elliott wave, you need to know how to use Fibonacci retracement, extension, even the projection correctly. Okay, so this is how we use the extension to trade gold for the past 1 to 2 weeks, like last week and like last night as well. Okay, last night I just show you guys there is extension, right, for like this one. Okay, you can see that one price break above this high, so you cannot draw this one, you cannot use this one anymore. Why? Because the recent high is here, this is the recent low, right? That's why you need to draw extension from this level, and price you can you know, reverse from extension 127 like this. Okay, continue. Okay, this is a key level I just already mentioned. Okay, I don't want to go too much on this, which I already just tell you guys. Okay, respecting market structure. So basically, like support and resistance, Fibonacci retracement and extension should be used in conjunction with existing support and resistance level. That's why first, what you need to do, you need to identify the key level first. For example, let's say you want to identify this is my support. Let's say price falling, I would identify, okay, this is gonna be my pullback support level. So when you see that price is make a low here and the high, you can pick here. Okay, you plot starting point, 100%, ending point is 0. You pull off it, and then you can see that which is the closest. You pick either you leave 61.8 and 50% flip here, and then you need to keep note of maybe the wick. So this you would identify, this is your pullback support level. So identify the key level first, and then you plot your Fibonacci. Okay, maybe I can use this low and the same high. Okay, so where you can see that there is another 50% Fibonacci level right here. Okay, let's just see you sell, and what you can see that price come to where bounce off from our support level. You can see that, right? This is how you use Fibonacci combined with key level. Okay, and the trend line, okay, you can use the trend line or other indicator to confirm Fibonacci signal. Volume, you can use those like volume indicator to confirm as well. New event, okay, when you trade with the new event, okay, I suggest you to go on the higher time frame. For example, you will see that I always, or most of the time, I will look for the key level based on the higher time frame. Okay, so if you trade those like non-farm or any like high impact news, you shouldn't wait at the lower time frame for support resistance. You should go either H4 or high impact news, or even daily, or even like maybe sometimes H1. Okay, if you trade during news, okay, if price approaching your key level, you go to the lower time frame. Why? Because for example, yesterday, okay, let me remove. Okay, good day to you too. Okay, Jamiru. Is this your, I pronounce your name correctly? Okay, for example, yesterday, okay, price all the way up to where our extension is, where extension 127, right? That's why we sell right there. For example, here, let's say price, okay, then you can see the rejection. Yesterday the news came out, it's a positive for dollar, but gold is still rising. But I think 5 minutes later, price just, you know, falling from the extension. You go to the lower time frame, what you see now, we monitor whether if we want to sell this level, what you can see, oh, you can see there is a sign of the reversal at the lower time frame, right? You can see M5, and then you can sell here where you're going to put a stop loss. Okay, if you have the bigger lot size, you will know that the next level gonna be where, gonna be at extension 161.8, so which is around more than 100 pip above. So if your account is have the bigger account, for example, you can put slightly above that level. But to me, okay, if price, okay, if I trade at the extension, most of the time I put my stop loss slightly above this high. Okay, a few pip above, because if price break above the extension 95% or 90%, okay, I don't say 100% or confirm, but 90%, okay, price will reverse at 161.8. so if you get stop out at this level, you wait for the next level. So you don't have to like, you sell here, price keep going up, you keep selling, after that your account is gone. No, you should put the stop loss slightly above your 127.20 extension. If got stop out, this is the last sell entry, the last sell zone to recover is right here. Okay, now we go to the lower time frame, which is yesterday. You will see that I saw the confirmation price action. Okay, you can pull out, or you can pull out ISI. What do you see? Overbought, right? You can see the overbought, and then you can see you sell, and then after that price is even go okay, you can see M5, M15, look at M5 confirmation. If you keep looking here, you might think, I think it might want to break. No, you go to M15. What is your confirmation? Red candle. If this one closing in gap with this candle, you know that they're going to fall from this level, right? You can see that. Then you sell. Okay, so this is how you read the candle. And stop loss just put slightly above, like last night is at about 28.29. You can put like stop loss 28.32, or 34, up to you, okay, because depend on your lot size, depend on your capital as well, okay. So the new events go to the higher time frame H1 at least, okay. You want to trade this coming non-farm payroll, just take note of that. Using Fibonacci in trading market, okay, like you can identify trend, okay. Use technical analysis to determine the current market trend, whether uptrend or downtrend. So you need to look at market structure. If price keep make a higher low, and then you know that that is bullish or uptrend, okay. If downtrend, make a lower high, okay. Low can swing high and swing low. That's why you need to identify the swing high, which is the highest, and the lowest point within the trend for accurate Fibonacci measurement. Apply Fibonacci retracement or extension, okay. In the trading view, okay, I use Fibonacci retracement for Fibonacci retracement and extension. For the next webinar, like 2 weeks later, I'm gonna to use this for Fibonacci projection, but in the trading view they call Fib extension, but actually we use this for projection, okay, like this tools, okay. Confidence of Fibonacci level, okay, like I just show you guys. So multiple signal, so when multiple Fibo level align or line up together, they can provide strong confirmation of potential support on or resistance level, like just now, right? I showed you guys, and it also increase significant when the retracement extension coverage at a certain price point. It can indicate a higher probability of reversal or continuation, improve accuracy as well. So like just now, example of gold, right, at the pullback where is I think H4 time frame, okay. I think this level, okay, it is over here. When you see, when I say that you pick the recent low or recent high, this is the recent one, right? This is the recent one, okay. You can draw here the recent high, and another one you can draw here. So we want to see Fibonacci line up close to each other, so you plot swing low to the swing high of it, okay. Of course, I identify this is gonna be my first support, right, and then I will keep, okay. If you were to ask me, there is a 50% and 16.8%, which one should you pick? We don't know, so you can pick two, because above here there's a wick, so the zone is big, okay. We leave like that, okay. And you can draw another one, which is just show you guys from this swing low to swing high, and then what you can see, there is 50% right here. So now, even though this is a bigger zone, but this is gonna be your zone, right? You can see that is really strong confirmation. That's why one price is falling or bounce off. But let's look at the lower time frame. What do you see? What do you see? There should be a divergence here. You see the divergence here? Yeah, right? You can see that bullish divergence right here, extended, and you can see that, okay. This is M5. What about M15? You can see the M15 have what? Price action, okay. And you can see that this candle ending with bullish engulfing, right? The sign of reversal as well, right? You can see that. Go ahead for again, and then this is the area of the buy entry. Let's say if you say that, oh Peggy, you see, you identify the key level support, which is from 2776, which is this number, okay. And the lower one is where 2771, so it's about 50 pip. Then you tell me that, oh, that is quite a big zone, okay. That's why you think that's a big zone here. You need to go to the lower time frame, right? One price approaching, you go to the either M5, M15 to wait for confirmation, and then after that you will have type stop loss. Where is your stop loss? Another one, for example, this is your low, this is your recent low here. Okay, you can use what? You can use the Fibonacci in the lower time frame as well. Okay, you will see that you can use Fibonacci extension to place your stop loss, which is, I will place here below. I don't know if you have stop loss right here, but you know, below extension 161.8. so this is my stop loss. Okay, this is my stop loss, so use the extension to place the stop loss. Okay, you can do that as well. In this case, I draw from where? From this one. Okay, starting point, where? Starting point is always you know, 100%. Ending point is 0. So if price break below the starting point, then you will use the extension. Okay, you can see that this is last extension. You put the stop loss below your extension. Okay, in the lower time frame. All right. Okay. And tip for effective trading with Fibonacci. So always confirm with other tools. I just mentioned you can confirm with Fibonacci or moving averages, but my step is that identify the key level. After that, you plot Fibonacci whether your key level is line up with Fibonacci level, and after that you can use RSI to identify. Okay, I have two methods to use for RSI. One is to find the divergence. Second one, I want to see where is overbought and oversold. You can use that as well when price like for example right here. Okay, here I will identify my first support, right, like right here, and I know that there is a Fibonacci level, which is just now is 60 to 68.6 and 50%. Okay, I make it bigger, like right here. Let me go to like somewhere here. Okay, and then you, if you want to look at H4, what do you think? You think if I want to confirm with the RSI, but you seem like, but I think RSI can fall even more. But what you could see is about 50% in the middle of this. Should I just use the middle and the lower? Okay, you can see the price is reaching the like middle one is 50. You can go to H1. Okay, you go to H1, you see the price is approaching at least 30, right, for the RSI. I go to the M5 or M15. Why? Because I want to see the confirmation. What do you see? H4 approaching 50, right, the RSI. H1 is almost approaching 30. My confirmation in a lower time frame also at overbought, right? This is overbought. What about M5? M15 overbought as well. So I have how many confirmation? Okay, I think it's good for me to buy here because I identify this my key level. I have Fibonacci line up together with 50% Fib and 61.8, and then I go to M5 again, overbought with M15 and M5, and there was divergence here, so you just buy. Okay, then you buy up. You use where you place a stop loss, use the extension in M15, M5 or M15 to place the stop loss below, right, below your extension here. Okay, and then you hold to where? Okay, we don't know whether price will go make the all-time high. Definitely we don't know, right? What I know that I will just aim here for my first TP. This is like a resistance, pullback resistance for M15, right? And then you can see bounce off and continue and hit your take profit. Okay, that's it. Okay, because now we can see the price make all-time high, but when the current like market, when you trade, you don't know whether they're going to make all-time high or not, right? So you just press the take profit in the like the level, like this is the resistance level, which is I based on like M15, which is somewhere here, right? And then if you think that price is going to make an all-time high, you can do the trailing stop loss, right? Or you close some partial profit and then you hold until like if price break above the all-time high here, and then the next resistance, that's gonna be we use the extension. Okay, okay, continue. Okay, look for the confidence level. I just mentioned already. Avoid relying solely on Fibonacci. Okay, so a lot of the trader or even the new trader, they have a question. They're asking me like, there is so many, for example, the Fibonacci retracement, what number we use. Okay, ignore those like a negative or extension. The Fibonacci that we are using, this is the only, right? This number. And then they will tell me like there is so many numbers, so which one I should use? Maybe I can use 23.6%, 38.2, 50. How? That's why I say you cannot purely trade on Fibonacci level. Okay, there is no magic. That's why you need to know how to look at market structures. You need to know if price break above the high, where is the pullback support or where is the key level. And second step, and then you use Fibonacci, okay, to confirm the level. Okay, for example, let's say you draw, maybe I change another pair. Maybe I just, for example, okay, over here, let's say you draw Fibo. Okay, this, if we know this is gonna be your pullback, right? This is gonna be maybe I pick another like the random GJ, maybe, for example. Okay, for example, maybe I identify this is a high, right? This is the low. Okay, there's so many number, and then maybe you start to this is not a good one. I just pick from this level, for example. Okay, this is the level. Okay, and then you always think that, oh, there is a small pullback, or you think that's gonna be the level. Okay, then you might pick this, for example. You think this is gonna be for example, okay, like this level. You will pick okay, maybe you pick this level, for example, because you think that this is your resistance or this is your support, for example. Okay, this is a good example. Where is that? Oh, here. Okay, so wait, price starting to do the high. It make already? Oh, no, it's over here. Okay, go to M15. Okay, here. Okay, let's say based on M15, this used to be a resistance level. Okay, right, this is your resistance level, and now price break above, it's become your pullback support. Okay, it's gonna be the pullback support. Everything gonna be the pullback support level. I gonna remove first. So now, okay, now what you see here, you cannot draw Fibonacci retracement. Now you cannot. Why? Because you can see that price still rising, so you really cannot find the ending point yet for the M15 or even like M30, right? So what you need to do, you need to wait for price to make a new high first. What's so slow? Okay, now based on only M15 here, okay, you can use this is the high and this is the low, right? So you plot from swing low to the swing high. Okay, and based on this that's too far, sometimes it's too far here, we will based on Fibonacci level. So you would identify, okay, this is your first support, and then you will think that okay, this is gonna be my support level on this area, right? You can see that you will get like the stop out here. Why? You need to go on the higher time frame, which is H4. You will know that this is the resistance level on H4 time frame. Okay, so this is the resistance level on H4 time frame. If you only look at the in the lower, where is it? Oh, that is no way. M15. Okay, that's far away. It's okay. Over here, my key level for this level. Okay, if you to trade based on only 26.6%, then you will identify this my first support. You might get a stop out, because to me my key level is here. This is gonna be my pullback support level. I have 61.8%. Okay, I'm not gonna look here. I'm not interested at this level. Go to a higher time frame first. Okay, you look for the high here. Either for the GJ. Okay, you cannot even see the GJ here. Over here, we identify at the resistance, but I will zoom. If you trade here, okay, this is your resistance or your fair value gap. Okay, you can see that. Just like this is the fair value gap, right? So price is falling, okay, from this level. So if you want to buy up, you're very risky. So I'm looking at this zone in the lower time frame, right? Continue. Okay, price rising. Okay, meaning it's good at capturing and then boom, right? From here, you get the pullback at 20.6%, but you can see this is a resistance based on H4 time frame, right? Then price is falling. Even like if I want to trade here, I think that's what the news. Like Friday, okay. So this one, I'm not gonna trade on M15. Okay. If I trade here, I may get a stop out. But if you were to trade here, look at the lower time frame. There is a news. So in this case, right, don't have any like buy entry at this level, or I wait for it, because you can see that in the M5, boom, right? So try not to look in the lower time frame. This is gonna be your pullback resistance. That's why price is falling to your resistance level. Do you think we're going to stop here? Starting point, ending point is here. The key level I'm looking for, maybe I'm looking this level, which is have 50% fib. Okay, then you can see the price bounce up, right, at 50%, and then continue to rise. Okay, so when you identify the key level support and resistance, you look to your left. Okay, look to the left, and then after that you plot Fibonacci retracement. Okay, and continue to rise. Okay, common mistake to avoid, like just show you guys, ignoring market structure or trend direction, blindly entering trade at the Fibonacci level. Go to the lower time frame to wait the confirmation. Confirmation could be price action, chart pattern, divergence, or low line rejection. Okay, over complicating analysis by using too many indicators. So you should only keep how many indicators. I personally use RSI and retracement, Fibonacci retracement extension. That's all. Okay, if you like use so many indicators, you might get like confusion. So try not to use so many or too many. Okay. So far, you guys have any question? Okay, so practical trading example. So what you need to do, entry, identify potential, either buy entry or sell entry with confluence of Fibonacci retracement level or Fibonacci line up together, and then you can place stop loss. Okay, either below, for example, this is the buy entry. Okay, you put the stop loss below the Fibonacci level. Okay, for the profit target, you can use Fibonacci extension or Fibonacci level to place the take profit. You get what I mean? For example, okay, if I were to sell here, let's say if I have the sell entry at this level, okay, I use the Fibonacci. I would identify based on this one, okay, this is gonna be my first support, line up with 61.8%, but usually I will sell here. My take profit, okay, I will put slightly above the support level, which is our bread on this week. This is gonna be my take profit. Okay, where you're going to place the stop loss, okay, you can use the extension. I will draw from this swing high to the swing low, right? You can see that the extension, this is your extension for the sell entry. So you put your stop loss above your extension, which is above this number 127.20. You put a stop loss above for the sell entry. Okay, for the buy, okay, so now we sell. After that we buy up at our pullback support with 50%. Now you buy, okay, you buy here. Where you're going to place the stop loss, okay, you put your this is going to be my second support, okay, meaning that if price break below my first support, this is going to be my second support, which is has 50 for first, second for 78.6%. I will add 61.8% as well to place my stop loss, or you hang on, okay, no, where is my 61.8? Yeah, I buy here, I put my stop loss below golden level here, or you can go to the lower time frame, which is where M what, M15, to use what, to use your extension to place your stop loss. Okay, so where your stop loss below 61.8%. You even have the tight stop loss, okay, refer to H4, you place below 61.8, right? But if you have a bigger loss size, you think that, oh, I think I cannot bear the loss to over here, so you can use the extension on 61.8, all right, and then you place the stop loss for the buy entry here. Usually I will go to the lower time frame and then use the extension to place the stop loss. Okay, continue. Profit target, okay, okay, for the buy entry, let's say we buy up, okay, at this level. Where is our take profit? Where? So now we're gonna use the Fibonacci level. We have already the high here and we have the low here, right? So you need to pull your retracement from your swing high to the swing low right here. Where you take profit, I know that this is gonna be my resistance level. I will identify this is gonna be my resistance level, right? So my take profit is where? Slightly below 50% fit. Okay, so I buy up. I want to make sure gonna hit my take profit. Okay, now this is hit my take profit, and then it falling from where? From where? My resistance level, which is here. I draw from here, right? Close to 61.8. So you can use Fibonacci to place stop loss and take profit. Okay, you guys have any question? Any question, guys? Okay, that should be end of the webinars. I pause here for a while. We still have like 15 minutes. Okay, I will maybe look for the trade setup, or you can request if you have any specific pair you want me to look for you. Any question, guys? Any question? If not, we will look maybe some trace it out for later, maybe. Okay, somebody asked for oil. Okay, Ajay, nice to see you here. WTI, right? What's this? Oh, sorry. That would be... Okay, let me look. Okay, based on daily time frame, right? I already see the buy entry. Look at the RSI. If I want to see, I think price can falling more. It haven't reached my key level. Daily time frame. This is, I will identify this is gonna be my pullback support. Okay, so I will use Fibonacci retracement. You will see that will be where 61.8 right here. This you can slightly see the pullback. I will use draw from here as well. That will be 78.6%, and there is 50%, 60%. So this is gonna be my area of support level. So now you can see price approaching. We go to H4, right? H4, are you sure? Are we safe to buy at this level? You can see the pullback. Okay, there is I will adjust right here. It seems like they might want to capture us at this level, like this level. So this is going to be the zone, right? Now you can see the rejection. So what we need to do here, I will go to M5. I want to see what I want to see. M5 looks nice. It seems like the bill pattern, but seem price falling. You can see that the zone is quite big, right? M15, is this good to buy? It seems like there's a divergence here, okay, versus RSI. So this you can buy, since like see this is confirmation. So actually you can buy the oil. Okay, so this is your buy entry. Okay, you can see the confirmation here. What about M30? Okay, there is a divergence here. You can double click to make it bigger. In M30 there is no divergence. We have divergence only in like M15. In this case it might be risky, but if you know the trade, okay, you can buy always in like this level. You can buy where your stop loss maybe below this one. But again, if price falling in the zone again, you can have another buy entry. Okay, so but if I were to see the zone big, I already buy at this level, I will use, but you can use the extension in this case, okay, in the lower time frame. Okay, the stop loss put below 61.8, because sometimes price might continue to fall to get the extension and then continue to go up. Okay, so this is up to you, depend how you trade, but this is quite the big zone. Okay, price might continue to fall. If you want to look for market structure shape, okay, what you need to see in the M15, okay, if price continue to go lower low, lower high, meaning that this can still lower. For the ICT or SMC, okay, what they want to see, they want to see the market structure shift, meaning lower low, lower high. They make a pivot low here. You wait for price to pull back somewhere here, and then you buy at this level, which is maybe line up with this level, and then you buy. Okay, so now what they see, they monitor price need to break above this pivot high to make a market structure shift, right? Break above, make a new high, then they will use Fibonacci. Price pull back at least 50%, right? And then you're gonna buy at like maybe this level. So they will wait for price to pull back at this zone, and then you buy. So meaning that they need to break this previous high here. Okay, just hang on, somebody asked me the question. Okay, what level to use for the pullback? Okay, this is Fibonacci level. There is no specific pullback. Like I just mentioned, you need to identify the key level first. Okay, all these level you can use for the pullback. Here, like this one you can. Oh no, okay, at this 78.6% is used for the pullback. 88, that is not Fibonacci level. We use for harmonic pattern. Okay, this is the pullback, but not many level price gonna pull back. That's why you need to identify the key level first, meaning that you need to find the support or resistance, and after that you plot the Fibonacci, and then you see whether the key level is line up with any Fibonacci level. Then that is the level that price is gonna pull back. That's why you need to know how to identify the key level correctly. Okay, UCAT. Somebody asked for the UCAT. Okay, go to the high. Okay, now what we need to do here? I need to go in with a higher time frame. Daily cannot. Okay, weekly. Weekly. So before that, price was ranging. Okay, right, and then they kind of make the high. So what we need to do? We need to use the extension. The next target that we are looking for at this extension around like this level. No, wait. I will use the extension, which is this number. We could identify this is gonna be our like a resistance level, which is here. But this is the recent high, right? Okay, do you think price going to break here? But if price break above this high, the next resistance level, which is this, I'll just put this one first, and the next one is gonna be right here for the extension. Okay, this is a weekly. Okay, I will leave it like that first. Here, so zoom in to see. Go down to daily. You can see the price is at the resistance, right? The resistance, and then falling. So this is your resistance level. Now I can use Fibonacci retracement. So let me find the key level first. I might identify this is the support level. You can, this is my support level. I refer to this swing high. Okay, and price is falling. This one is gonna be maybe 38.2, exact 38.2 for the daily time frame. The next support level, I would identify this my second support, and this one could be 38 and 50% fifth. Oh no, 38 and 61. 38 okay, this is lovely, right? This is the level. Okay, so what we need to do, so we wait for price to pull back and then you're gonna buy. Now weekly overbought, right? Price still falling at least 50%. Go to H4. What's happening here? So now in H4 time frame, okay, H4 time frame, the recent low is here. I will use the Fibonacci extension. Do you see that? I will use 127 for my first support. We have an extension right here. Okay, for H4 time frame, okay, if you swing, you can this one you buy up. Okay, for the second support for the H4, it's gonna be here. This is gonna be my second support for H4 time frame, and I think this one is gonna be 38 and 50% fifth. Okay, exact, and here. I think that is extension 12761.8. Lovely. So this is my key level on H4 time frame. Okay, so basically if price falling all the way here, I'm wait to buy at this level, these two zone. Okay, don't buy now, right? Because you can see that price still falling even more. At least where you're going to buy, if you want to use RSI, at least where 50. Now price is somewhere around at 43, so you need to wait for price to reach at least 30. So you can see that still have the room to our support. This one still have the room for the support, so be patient. Okay, it's still falling. We go to H4 H1, right? What do you see? We use the extension. If price break below this low, okay, they will go like that. May continue to go TP. If they're falling, pull back, maybe come here, or if they break below this one, gonna pull back. This is gonna be a TP and continue to go lower. Okay. Okay, so now, do you have any pair you want me to look for you? Okay, give you the numbers. Plus minus a few pip. Okay, okay, this is the one. Okay, where is the resistance level? Okay, this is the resistance level. I think I draw from like the sometimes you cannot like use from here. What I can do, this is gonna be the projection. That's too far. Okay, sometimes either too far, we can go to like 1 higher time frame extension 161 for projection. Okay, okay, so this the level. Okay, USD HF price falling for my, you can see that the resistance level break below my support. Okay, so break below my support. My next key level where here is gonna be my key level. So what can I do? The extension price did not trigger extension, but you can leave like that for the second resistance. You can use the swing low here to the swing high, right? Or fifth, you can see that my first support now we have 78.6%, and my second support I have 38 and 61.8. This is my level, meaning that price, if price break here, TP1 if you sell, TP2 from here you might see the bounce at golden level, which is 61.8%. Okay, do you have any position, Ajay? This is, do you see the number here? Because here you can see. If you cannot see, you let me know, okay? Because I can change the color. Maybe I just change. Oh, this even worse. Even worse. I use this color. What are key projection level to short? Projection gonna be like 2 weeks. The 2 weeks from now, I will cover the projection, because next Tuesday, sorry, next Tuesday, I'm gonna share with you guys how to use the projection. Okay, the price falling already. So if you go to trade, right, you can see that if price at the key resistance level, what you think that it make an equal high, right? This is an equal high. If they make something like they need to break below this first support, then become like M pattern. If they come to here, pull back from the support, become the resistance, gonna sell, pull back and gonna sell. Okay, so now what if you want to go to the M15? Do you see the confirmation here? You can see, right? You see what is this? It's lovely PA. PA stands for price action. Okay, you see here, lovely, very lovely. You can see it's very powerful here. M15. Yeah, you see, right? No, unfair. No need to. Some of you guys don't even go down to M5, M15 to see, right? But from now, I share with you guys. If you never trade with PA or price action, you miss out a lot of good entry. like this. You see, this is a good one. Okay, you see, this is a good one. This is M15. What about the M30? M30 here, if you want to read the candle, what do you see? Nobody interested to buy, right? You can see closing and opening. This is closing, and this is the opening for the red candle. Closing here, people buy after they close, after they just sell. This is the opening, closing here, so there is nobody want to buy, right? The buyer already closed the position because they know that it is a resistance level. They're gonna sell. Okay, you can read the candle if you know how to read this, like see here, but the PA is already here. Okay, any question, guys? Any question? Any last request? Okay, let me just do the go analysis for you. Okay, what's happening here? There is a divergence here or not? Do you think there is a divergence here? Yes, there is a divergence here. Okay, there's a bearish divergence here, so we just identify based on the extension. Okay, I will just use before end of webinars, or 127 and 161.8. So here, so let's say if price break above the all-time high, which we identify the resistance, which is extension, the next target this is going to be our second resistance level. If price break above first resistance, the next one here, you wait to sell here if price break above. Okay, the support level is still here, is your key support level for first support. Okay, the next support level is here, gonna be second support, right? You will see that here. So there's a divergence. I think price could falling more. Okay, there's a divergence here. Okay, what about daily time frame? Watch out for the daily. If today, okay, if today price closing have the rejection with price action, so tomorrow you look for the sell entry. Okay, look for the daily candle. I think, I just feel, okay, I think, but we cannot trade based on the feeling. But what we want to monitor is that if today, okay, the candle, daily candle close with the rejection and the body close below the wick or close below like this candle, tomorrow the day, oh no, like tomorrow you look for the sell entry, because look at the eye side, it's already overbought, right? It's already overbought. So we need a confirmation that price need to close with price action, which is the daily time frame. Tomorrow you look for the sell entry because it's already overbought. Okay, meaning that they may not make all-time high until like extension 161.8. maybe just use this extension and then falling. Monitor the candle for today. Okay, I think today you will see the falling to this level again because there's a divergence in the H4. Okay, like this one, there is a bearish divergence. So just monitor the daily time frame for the price action. Okay, that should be all for today, guys. Thank you so much for your time. Okay, I will see you guys again next Tuesday. Okay, next Tuesday for Fibonacci projection series. Okay, guys, thank you so much. Okay, take care. I will see you guys again next Tuesday. Okay, bye for now. Happy trading. Okay, so this week is non-farm payroll. Just trade safe. Okay, see you next week. Bye, guys. You're welcome. Bye.